Hello, happy February. I hope we're thawing out a little bit. January was definitely a pretty cold month. So, welcome to the second month of 2026. Wanted to give us some outlook. We've been spending a lot of time so far this year looking at what the outlook for 2026 might be. Obviously, 2025, pretty good year for the markets, above average in almost every measure. So economically, starting off there, consumer spending still looking pretty strong. Consumer spending certainly does drive a lot of the economy and economic activity. All across the income spectrum, except we're starting to see a little bit of cracks down at the lower end of the income curve. But that's pretty common, especially with the inflation that we've been seeing here over the last couple of years. Inflation actually seems to have settled. That doesn't mean that prices are going down. It just means that the rate of increase has settled around the target rate of 3% and maybe a little bit elevated. The Fed does predict that they might cut rates two more times this year. We'll see. Obviously, the data has to support that. Labor market. Low, the firing rate's definitely low, except in some areas, and especially areas where people saw job losses last year, most notably the tech sector. But keep in mind that was after a period of way above average hiring during the pandemic era. So labor market seems to be pretty good. Unemployment's been pretty sideways. We're not seeing really any spikes in the unemployment rate. Wage growth has slowed, but again, when you're looking at the curves there, we definitely saw a bit of a spike, during pandemic era. So we've seen wage growth certainly slow down, but it still is tracking above its long-term averages. So that's good, and you want wage growth to obviously, most importantly, outpace the rate of inflation, so that we can all keep up with purchasing goods and services. Themes for this year, certainly I mentioned the Fed cuts, looking like maybe two more times. AI, we're still seeing lots of big spending in the AI space. Obviously, some of those darlings of stocks that we see out there, like NVIDIA, last year, obviously, we're going to continue to see AI spend. Most companies are certainly looking like they're going to continue to spend in AI. Not so much, maybe down at the smaller employer level. Small business owners don't seem to be spending much on AI, but definitely a lot of the larger companies are kind of all in on that. So all in all, 2026 economic growth does look positive. We're not anticipating stock market returns this year to be like last year, but obviously after a big year, a big above average year like we saw last year, that probably goes without saying. More risks that are centered globally, obviously on the political front and economic front. International stocks did really well last year. That theme looks like it's going to continue. We're certainly making some changes to our portfolios to position, to take advantage of some of those perceived increases out there in the global marketplace too, as well as paring back some of the positions that actually provided us with some really good returns. So all in all, so far a good start to this year. January S&P 500 was up about 1.5%. Bonds are pretty flat. The story this year, as it was last year, precious metals have certainly been, in the news quite a bit. Take your pick, lots more buying out there that we're seeing, both from central banks and from investors as well. We do have allocations to precious metals, not that you specifically see in portfolios, but contained within the portfolio, we do have some exposure there. On the downside, we have seen that, it's not a panacea. People tend to think that gold and especially now silver never go down. They do go down. We saw that even on the last day of January. Gold was down 16%, silver was down 39%. So those asset classes, even though people tend to hold them for safety, they're definitely not riskless in investments. So just keep that with a grain of salt out there too. Last thing that I wanted to mention, I had a couple comments on some December statements that people were seeing, specifically the Schwab statements, where it showed a decline in the value, quite a decline in the value of portfolio values there. However, the overall return for the month was positive, and you would actually see that. And that's an accounting issue more than anything else. So mutual funds that had capital gain distributions at the end of the year actually, from an accounting standpoint, show as a negative return, even though the way that mechanically that happens when a capital gain distribution is declared and paid. You see the money get reinvested, the share price goes down, which is what accounts for that decline that you see, because it's only measuring prices. But in reality, you just end up with more shares at a bit of a lower value, and your overall value is the same. So a couple people mentioned that. I thought it might be relevant to bring that up. If you want to go through that, I can access all statements, so we can definitely walk through that if you're curious and get down into the nitty-gritty of the transactions there. But other than that, I hope you enjoy February. One more month ahead of us of winter. Hopefully it won't be too cold. And for those of you in Florida, enjoy. I know we're getting some colder weather down there too, but not like up here. So all for now, take care, and have a great February. Thank you very much.